Today we're here with Rob Morandi of Nationwide Mortgage Bankers, and we're helping people understand a little bit better the whole process of a mortgage, when to apply for a loan, and what the whole process might look like. So hopefully this is some good information to get people more comfortable with a very important process and really a piece that we need to start when we begin looking for a home.
Good stuff. So talking about being comfortable, let's get uncomfortable for a second.
Go for it.
We talked about how old we are, but we go back a little bit, so, right?
Yeah, we're getting old. Seasoned.
See, good word. I like that. Seasoned. Yes. Seasoned. So we go back to 11?
Yeah,
10?
let's say 11. Yeah. Let's say 11. That was my first year, I guess, in Libby. Right. And that's really where you and I kind of formed a relationship, and now, that was the first part, right? Like, no, we didn't do business. We just had a friendship.
Right.
And then the trust came, and then business started, and then here we are, 15 years
Crazy,
later.
Right.
Doing a lot.
And you've been our go-to guy since, so
thank you.
Appreciate it, Rob. So I know, Stace, and we got a couple of questions.
Yeah, please, shoot.
Before, just a little bit about you, a little history about yourself, how long you've been in the business.
Yep, so went to college, University of Vermont, studied finance, business, minored in economics, majored in marketing and small business management. Got into a little bit of Wall Street at first, and then you quickly realize as a day trader that you are, I shouldn't say day trader, that's not right, a stock broker. You realize that it's not necessarily about the customer, it's really about the bottom line. And you know, over 6-7 months, you realize this is not for me, so you shift into what, you know, friends and family talk to you about. Hey, what are you doing? What are you doing? How are you successful? Like, hey, real estate, mortgages. And then one of my best friends, still to this day, kind of brought me in and was like, okay, we'll give you a shot. And Wells Fargo was like, no, you won't. Go away. Come back when you have a book of business. So we just did that. You know, you become a broker. In 2005, you get some level of understanding, and then you get hired by somebody that's, you know, a bigger bank that'll give you a shot. So we started June of 2005 was kind of like my first month, I guess you'd say, in the business. And we've been rocking and rolling ever since. So I guess this June we'll celebrate 20 full years in the business. Went from just being a junior LO to an LO to a senior LO to a manager to now a vice president of sales, but I still originate. So what that means is just that you still work with the client, you still work on mortgages, you still close loans directly. That's something I love and will likely never, ever give it up, no matter how high on the chain you go. Right, that's the lifeblood, right? That's where the fun is.
It is a lot of fun. You get to meet some amazing people.
Yes, the people, seeing the excitement. Oh, listen, we got some tears in there, right? But the excitement of showing somebody they were a renter, maybe their family didn't give them the belief that they could do something, and we show them that if you listen and trust us and you believe in yourself, that you can make this happen, and we can help you foster home ownership.
Very cool. Good stuff. It's about the dream.
So hopefully we're in it for another 20 years.
Yeah. Right.
So I know Stace kind of popped a couple of questions together for you.
Yep.
We had some of our listeners and people that follow us reach out as well. So Stace, if you want to start with
Definitely. I think it's really important to understand when to start the process and when to reach out to your mortgage banker or your loan officer. So
for me personally, and this is for all markets. This is not just the seller's market, buyer's market, even market, right?
Right.
It's never too soon to understand what you qualify for, what programs are out there, what is the landscape look like right this moment. And the reason I say it's never too early is a few reasons. One, there could be blemishes on your credit that you didn't even know about, right? And I can help you through that. Might take a little bit of time, right? Could take a month, could take 3 months, could take a year, right? It depends on that. But almost more importantly in this market, as I'm sure you could attest more than anybody, is Murphy's Law. If you're not prepared, is when you find the house that you're like, this is the one for us.
Yes.
And it's a Sunday afternoon at 3 o'clock. You already had 100 people online. You already know the agent. They already have 5 offers. What does that mean? That you know Monday's coming best and final. Tuesday, 5 p.m., we give you the advice as to, you know, who we're going with. but I have kids, I got family, we got lacrosse, we got basketball, we got soccer, we have things going on.
Right.
And that customer, I know, like Stacey, for instance, you were like, no, I'm trying to get so-and-so to you. I'm trying to get this. And they're like saying, yeah, we'll call tomorrow. Hey, we're going to go see property this weekend.
Yeah.
So we always kind of joke, we lead the horse to water, and then they don't drink, but then they start going real thirsty. And we say, well, we tried to navigate the water, right? No pun intended. We tried to quarterback this deal. And there we 3 o'clock. Rob may be tied up for a little bit, okay? Or maybe they're self-employed, right? W-2 worker, pre-approval in a couple of hours.
Right.
A self-employed person requires so much more data that a CPA might not have readily available on Sunday night by Monday morning, and then the customer feels they lost.
Of course.
And that's what we're trying to avoid. We don't want that customer to feel like they lost anything.
Right.
Hence why we feel like, hey, do the pre-approval ASAP. Period.
Okay. So
Murphy's
even
Law.
when you start thinking about the fact that you want to buy a house, you start looking, they want to contact you kind of at the same time.
Correct. Now listen, some people might say to me, hey, I'm telling you right now, there is no way I'm buying a home for another 6 to 12 months. 6 months at the minimum, meaning you're not going to go look this weekend with Stacey or Paul? You're not going to go to any open house? No, I'm not leaving for 6 months. In that case, maybe we don't pull the credit, or maybe we do like a soft pull.
Right.
We just kind of understand and give them info.
Okay.
Let them digest.
And when you say a
Right.
soft pull, what exactly does that mean?
So a soft pull is reverse to that of a hard pull or a hard inquiry, where it starts to ding the credit.
Okay.
Now, common misconception is that you have 1 or 2 credit pulls, maybe even 3 in a very short period of time. Let's call that less than 30 days. Bureaus understand that you're shopping,
Okay.
right? And they're not going to hurt you for credit inquiries.
Okay.
Now you start getting 5, 6, 7. Unfortunately, they don't know you as a human, right? They only understand the data. And the data looks like desperation. Why are you having your credit pulled so many times? And that's when it starts to negatively impact you. And when you get up there, 5, 6, 7, that number 5, 6, 7 could be 30 points per. Your credit could look really nice, and all of a sudden 100 points come off. So we see a lot of that in autos, where they're trying to farm out the deal, and they just go out and run it 11 times.
Really?
Right, so this is the example of like coming to me, you're kind of getting ready and prepared,
Right.
and then we find something possibly erroneous there, and we say, okay, let's start working on getting those credit inquiries removed. Not an easy task, and does not take a week. It takes time. You may have to get a professional credit counselor involved.
Okay.
Right, and this is all part of that like planning stage.
Right.
Now listen, this is some, not all, right? People come, I've already done like 3 today, and they fill out the application this morning. So it's not always a plan, a year out. I'd say 70% are going to be pre-approved, ready to go.
Right.
Now it's a matter of, do they find what they really, really want,
Sure. Okay.
right?
That helps.
Good stuff.
All right. So you think we'll go with another question?
Yeah, another
Sure.
question that was thrown out to us was typically, what is the minimum down payment? So for people out there, what are you seeing out there? But what is minimum?
So what I like to, minimally speaking, first-time home buyer, meaning you have not been on a residential deed in the last 3 years, okay, you're at 3%. FHA is not a first-time home buyer program, contrary to popular belief. It is a primary occupancy home. So you can have as many FHAs as you want over your life. Technically, you're only allowed to have one at any given time, but you can sell an FHA deal and then go buy another home with FHA again, right? And that requires 3.5% down. Conventionally speaking, first-time buyers are allowed 3% as well. Conventional is Fannie, Freddie. And then you go to 5% for everyone else, right? And then once you get up, let's say over $1 million and change, I think the new high balance limits, let's say, are, I think they're just under 1.2. Now you have to be careful with minimum down at this point, right? Once you go over that limit, you got to be careful with those down payments, right? You get the super jumbo or true jumbo, be prepared that 10% might fly, but usually it's going to be north of 10% when you get to those higher limits. Let's face it, those clients are those typically selling a buy, putting 50% down, never a real issue, but you want to be mindful of that, right? Because a lot of people might come to me and say, I don't want to buy now, I'm waiting for 20%, right, to avoid PMI.
Right.
Okay, it's a fair comment, right?
Yeah,
I said, well, how much money are you working with for down payment and closing costs? Well, I have $100,000. Okay, so if they're looking for a $700,000 home, they're putting between 10 and 15% down, let's say, the rest. I said, all right, well, do you want, if you're renting, let's be fair, right? If you're renting at these high-end places, you're at $3,000, let's say, baseline, that's $36,000 for the year. Yes, you can save the additional money, but you're still burning the rental. So at $36,000, that's your closing costs, prepaid taxes, prepaid insurance, prepaid interest. It's like everything.
Right.
Why not what we say opportunity cost? So the opportunity is to buy now, opportunity is to stop paying rent now. The cost is PMI.
Right.
Well, you say to yourself, okay, I'll price the deal. It's a great loan amount, great down payment, great credit score, right? Your PMI is $150 a month. So you're gonna say no to buying the home now.
Right, right.
Pay $36,000 because you got to pay another $2,000 a year in PMI, and customers hear that and they say, "Oh, I thought it was much worse."
Right.
So when is that? Just to go over that quick
Yeah.
side note with it, but that PMI goes away when?
So, great question. So borrower requested removal at 80%. They will remove it at 78%, but it goes off of original value and loan amount, so that could take some time.
Got it.
However, in this market, it's not a matter of if, in our opinion, it's a matter of when rates come down. Let's call that 24 months from now, because that goalpost continues to move a little bit. My vote, I think I'd probably bet people money on this, that rates would probably be in like the mid-upper fives by the summer. Maybe higher for longer is the theme, and we don't see that rate maybe until 2026. Yet to be determined, right? A lot of factors go into where the market goes from here.
Okay.
Yeah.
Good stuff. Good stuff. Good.
Yeah, so what type of loan programs do you offer? So you had mentioned first-time home buyers.
Yep. So that's a long list. So So let's start with first-time buyers. So Sony May, it's an acronym, stands for State of New York Mortgage Agency First-Time Home Buyer Program. I think we do it really, really well. I personally sat on their Hall of Fame for many, many years. You can find me right on their website. A little bit harder in today's market because such strong down payments are coming.
Right.
So a little bit harder, but so Sony May is a phenomenal program, 120-day lock, low interest rate versus current Fannie Freddie market, and they offer down payment assistance. So you're looking at 3% of whatever they purchase whatever the purchase price is, not to exceed $15,000. So this helps a lot of people that may only have, let's say they have $40,000, $50,000 to work with. That might wipe them out. They might say, let me have the down payment assistance. That way I can free that $15,000, and now I feel a little bit better.
Right. Okay.
Right. I can do a little work to the property, whatever have you choose. Right. So that's your first-time homebuyer program. Your traditional Fannie, Freddie, across the board, FHA, VA. Even though I don't do them, USDA. We are on Long Island. A lot of farm on the North Fork. We do have USDA. And then we shift into what is called the non-qualified mortgage space. So this is your self-employed / investor that says, hey, the old saying, it's not what you make, it's what you keep. All right, show me your tax return. Whoa, my tax return is not going to show you nearly enough of what I need. Go to your self-employed. Then we go into that realm. So we have profit and loss only, 12 and 24-month bank statement only, business bank statement or personal only. You can do employment verification only. For people like you guys, we have 1099 programs where we only underwrite the 1099. We don't underwrite the tax return, right? So this is all within non-qualified. So what this basically means is, and don't quote me, I think it was the Bush administration, second Bush. They said, hey, listen, Fannie and Freddie were bailed out by us, the taxpayer, right? They're called government-sponsored enterprises. They were saved by the taxpayer back in 2008. So moving forward, they said, hey, it's in what's called conservatorship. So the government controls them. Even though hopefully it'll come out soon. Maybe we could talk about that later. In this moment, they said, if you're going to get a securitized note, paper, by us, you must show it. We jokingly say, our cousin, the IRS, what does the IRS say that you made? Because back then, we just said, what do you do? How much you make? 200? Okay, 200 grand, boop, done. Right? They said, okay, show me how you make 200 grand. You don't have a tax return? Show me your bank statement that you make 200 grand a year. Show me your P&L that you make 200 grand. This is how we underwrite those files, and it's opening up a whole new level of business for the self-employed, for the people that go by this saying, it's not what you make, it's what you keep.
Okay.
Right? I'm W-2'd, so I just get crushed. But on the hindsight, you can go qualified. All right, so I get a little bit better rate. Now, let me ask you the question. If I gave you a half a point better on rate, or told you I can give you a half a point higher, but you can save $100,000 versus paying the IRS, right? Which one would you do?
Half a point higher, no?
I would take a half a point higher all day long. Now, I'm not self-employed, of course, so I can't play that game, but these are the conversations I have with people. Like I can't, some, not all. Because most entrepreneurs at that level, they're used to the lever game. They understand that they don't have the tax returns, nor do they care. They understand in the back of their head that their CPA probably saved them hundreds of thousands of dollars. I mean, we're not talking about 10,000, 20,000. You're making, $7 million in revenue. Mm-hmm. I mean, listen, there's got to be some money for you. Now bury it all, and we're going to help you. And this is how we're going to help you. Asset depletion. So you're super wealthy. Okay, we'll deplete the assets over 5 or 7 years. Right? In other words, if you have 5 or 7 years worth of mortgage payments left in reserve, based on an account that has, a couple million in it, let's just say, we can help that client get whatever they need. Now, obviously, that person doesn't need to be self-employed. They could be retired. They just have a huge retirement account, right? And then we have the one that's kind of the most popular on Instagram is called DSCR.
Okay.
It just stands for Debt Service Coverage Ratio. So you do some commercial. It's underwritten like a business loan, like a commercial loan. What are you buying it for? How much are you putting down? What's the debt on the property? And how much are you making in rent roll? That's the coverage ratio, right? As long as you have 1 + 1 or 1 on 1, so you have a $10,000 mortgage payment and you make $10,000 in rent, you're good to go. There's some investors that'll go lower, but believe it or not, the rate goes higher.
Makes sense.
They're kind of penalizing you on risk, right? So that's a huge one for investors. Big one right now. For both short-term and long-term investors. Long-term meaning like an Airbnb versus somebody that wants to buy a home down the block here in Hauppauge and rent it to a family on a per-month basis annually or for 2 or 3 years, right? Where other people go out to Ocean Beach, Fire Island and say, no, I'm going to do an Airbnb. I'm going to rent this thing weekly. Short-term rental, right? So we do a ton of that business as well.
You didn't mention VA, right?
VA, of course. Yep, absolutely.
Very important.
Love it. 100% financing, no mortgage insurance. If you do have, in the eyes of the VA, if you are disabled at a certain level, they exempt you from the VA funding fee, which in a VA loan is the most expensive part. Now, it is financed in, however, it could equate to maybe $100 a month in additional principal and interest. So the veterans that are exempt don't have to pay that. Okay. Right? It's phenomenal.
Question on the VA loan. So you can own a home now and still go on a contract on a purchase of a VA?
Yes. So you're going to sell a home that has a VA loan, and you're going to buy a new one that has a VA loan.
Got it.
Yes.
If the first
you can't. I've never successfully been able to do it. Have 2 VA loans at the same time, especially if they've used it a second time already, and then they want to have a third. They run into what's called an entitlement issue, where they can't have access to a certain loan to value.
So, in the first property, if it's a non-VA loan,
oh yeah, then you're fine.
then you're fine buying a VA loan.
100%. Yep.
Okay.
100%.
Good stuff. I have to ring you on that. Last question is probably the most important. We're all important, but we go through this a lot. So, how long will the loan process take? So, one, if you could kind of talk about that on the basis from a consumer standpoint, and then I would like to just touch on what can, like for us, we're always in a position when we're repping out client sellers, the inability to be able to facilitate the agent that's bringing the deal to the table. Obviously, there's logistical issues, but we're only allowed to have certain information. But what can we do to minimize our sellers' clients' time frame? Because we see loans, we see contracts go out on or about 45 days. 45 turns 60, 60 turns to 75. And in a market like this, there's deals that are closing. There's some banks that are closing deals in 2 weeks.
Yes.
So first question is, how long does the loan process take from a consumer standpoint?
Now, we're going to answer this specifically to a purchase contract, correct?
Yes.
So I treat purchase contract day one is the day in which we receive a fully executed contract. That would be day one. Now, I can start with a half executed because sometimes the seller might take 2 or 3 days to get back to us.
And I want to say this too, and hopefully everybody out there listening and our team will be able to probably cut part of this out, because not that all the questions aren't important.
Sure.
But this one right here, as we talk about, I want to kind of just dive in a little deeper, because it's what sometimes actually makes the deal, because facilitating a deal today is not just the price to our sellers, but it's time, and not all mortgage lenders give us all the information, especially when you ask them, does a home have to sell? And then you find out that their home didn't have to sell, but they're borrowing money from Aunt Jeannie. Aunt Jeannie's home has to sell. So, and we find that like after contracts are executed. So I don't mean to cut you, but
No, of course. So a process, I use the term organically. If I don't ask for favors, if we don't push an attorney to order title, if we don't push on the title company, we don't push on the insurance agent,
Right.
I don't order a rush appraisal, I would say organically in this market, you should be done with your deal in 20, 25 days.
Wow, okay.
Okay, if you want to speed things up, and I'll just give you the example because I have posted it in the past, in 2024, we successfully closed a few deals in 9 days.
I hope everybody's hearing that.
Right, so
Very important. Speed today.
let's look at the how that works though, and understand how you get there, right? Because you can get a CTC in 3 days.
And a CTC would be a
Clear to close. So so technically, yes. The problem is the way the government makes us do certain things. So we have essentially a milestone domino effect. So let's just start with Monday, just as an example. I think this is the easiest way to answer it. So Monday, we get that application and we disclose the loan application, okay? When we send out that application for the client's signature, that is generating what's called a loan estimate.
Okay.
Loan estimate is an old good faith estimate, or the newer good faith estimate, right? And it discloses every penny where it's going, who it's going to, okay? Prepaid taxes, prepaid insurance, prepaid interest, etc. Right? It's disclosing every penny to the client. That's day one. Now, to keep on this 9 days, you have to assume certain things. On day one, we also ordered the appraisal as a rush. Get that back in 3 days. Let's say 4 days. We plead with the title company and the attorney to order it that day, and please put it on a rush. You'll typically get that back in 3 to 4 days, okay? We don't ask for many of them because, as you guys know, it's usually like a 10-day, 12-day process.
Right.
It does take time. It's not on the company.
Right.
It's on the wonderful county that you live in.
Okay.
Right.
Yep.
So 1 day approval. So now you get the docs back on Monday. You submit the application to underwriting on Tuesday. You're approved on Wednesday, okay? Now we work with the client to get all the conditions Wednesday. On Thursday, we have all the conditions. Here comes the appraisal, and here comes the title. So Thursday, we review everything. Friday, we get pushed back into underwriting for a clear to close. So now we're 5 days in. Let's just stop for 1 second. We also have to go back early in the week. On Monday, we had an LE go out, loan estimate. On Tuesday, we have to assume that we locked the loan on Tuesday now. Now a CD opens up. CD goes out to the client signs it, Friday becomes the earliest close day. In a world in which all of that occurred in the first 72 hours, conditions, approval, title, appraisal, you could close that deal in 5 days. It's very difficult being from Long Island, as you guys know. Every property has a little something.
Right.
So title takes a little bit longer.
Yeah,
In terms of
you
the
have certain
client,
issues.
the client is done in 3 or 4 days. It's the other pieces that fall in. So when you deal with that, you have a 7-day week. The seller couldn't show up on the following Monday. Buyer said Tuesday's the best day, and that's how you really get to 8 or 9 days out.
Right.
And that's assuming there was no holidays. So our world operates on a Monday to Saturday in terms of government disclosure, but you cannot close on a Saturday unless you're a refi, but nothing really happens there, right?
Right.
So that's how you essentially get there, okay? Organically, going back to original, organically 25 days, 30 days is extremely fair. Because remember, you need buyer, attorney, seller, attorney, title closer, bank attorney, wire, docs. Like you need everything there.
Right.
That's a lot of human beings that need to get to the same place at the same time. Hence why those 5 or 6 days, it's really difficult to pull those off, right? Not that it's impossible, just really hard to pull them off.
Right.
To your point, and we've been having this a lot lately because we're loosey-goosey, best effort state. On or about, plus 30, plus the first TOE at 2 weeks, they reject it, plus the second TOE, okay, time of the essence,
Thank you.
right? You get to this point where we're like so liberal with how, this is a contractual obligation. You signed without a gun to your head to sell the property. Let's get this
Done.
to the table, okay? And what I would say to that is if you're looking at a timing issue, I'd treat it like a bank, like an REO. We're not an on or about, we're an on or before, right? That bookends your closing nicely. Certainly add maybe a per diem fee as you spoke about before, right? Not that anybody wants the money, just want to make sure that we bookend this,
Right.
okay? And you and I have this conversation all the time. Why put a 30 or 45 day commitment time in a contract?
It's not needed.
I mean, it's what, 1:30 right now?
Right.
You get a deal right now, you'll have a commitment tomorrow.
Right. I can,
Okay, even a busy day, okay, all right, you'll have it on Friday, 2 days
I can never
later.
understand the complexity, and there's a lot of times, like your bank, when we ask for a commitment, we get a commitment with no steps. Sometimes when we deal with other banks, they give us a commitment, and it's as long as a sheet of toilet paper, So the objective here is that when we work, it's good that we work together because ultimately we speak each other's language, and we know when typically we're getting a commitment from Rob, it's a commitment with no steps to it.
Right.
And those are the funny things in the business that most people, even as agents or other mortgage reps, don't. They're like, Paul, I'm sending you a commitment. Yeah, but that commitment has 50 things on it. Like, it's legitimately 2 pages
It's gotta
long.
be, at least in my opinion, okay? Yes, I park my license at Nationwide Mortgage Bankers. I am running a business. This is Robert Morandi's name.
Right, great point.
You have to
Great
have
point, Robert.
pride
Right,
in not only being grateful that you earned
the business.
your trust,
Right, yep.
you earn the customer's trust,
Yep.
and now they say, what do you need from me? Now it's time for me to step in
Right.
as a quarterback and say, what do you do for a living? Where's the money? Good. This is what I need. So I jokingly say, so we run a new LO meeting every week. You have to own the file. It's yours, nobody else's. Okay. When there's a problem, it comes
that.
back to you, not anybody else. Don't be pointing this.
Right.
Well, no. What could I have done better?
Yeah.
Because our goal, not that it's always, right, and I appreciate you saying it, not always, but you're going to get clear title, satisfactory appraisal results, final verification of employment, homeowner's insurance. Right? At the end of the day, those conditions will always be there. Okay? And if the appraisal and the title aren't there, that means your commitment took 2 weeks because that means they already got it.
Right.
No. We'll make it subject to whether or not the buyer's attorney wants to release that until they feel that they got satisfactory appraisal or title results. I completely appreciate and understand. Right? And that's where that communication with working as a team comes into play.
But I will say to you too that in the event that that there is a commitment with steps. One thing you pride on is that you'll give us a heads up. Like, there's always a phone call, there's always communication. So it's very important for people to understand out there that the banks at times will issue that commitment. The commitment will go to their attorney, and it'll be sitting there. And there's no, the magic word in this whole process is communication. There's no communication, and that's one thing I appreciate working with you, is that there's always proactive communication, and that's the one thing that most people don't understand in the industry, and usually use that pointer finger to say, well, it's my attorney's fault because it sat on their folder, or it was the loan officer's fault, or the attorney's assistant was out for 3 weeks. Like, our clients, like everybody else, have objectives in their life. Mother passed away, father passed away, the home's got to get sold because they're moving to Arkansas. So it is important. You know, that's the one thing I'd say to you, is communication throughout processes is sometimes people say we over-communicate.
Yeah.
But
Hey,
I'd rather,
there's nothing wrong with
I'd rather
that.
over-communicate than no communicate.
There's nothing wrong with that. I'm a human. I'm not saying I'm not going to forget something. I'm not
Right,
going to drop
of
the ball.
course.
But when you've communicated everything, you might pick up where I dropped something.
Yes.
You might be, hey,
Great
you
point.
dropped something.
Great point.
Like, thank you.
Great
Okay.
point.
Now, if it
point.
continues, then we got to reevaluate who we're working with.
Right.
But it happens once in a while. We're humans, right? You know, we have families outside this. We have maybe some side business, whatever the case is.
Right.
You know, there's a lot of moving parts, right? And we talk about process all the time.
Systems.
Making sure
Systems.
that nobody gets the crumbs don't fall to the side, right? There's got to be a catch for that, because that one customer that you didn't follow up with, or you forgot to call back, they moved
Hotel.
on, and then,
That's it.
as my dad says, you want to learn the lesson, learn the money lesson. So, you know, remember in the beginning, you lost a deal here, you lost a deal here, you didn't say this, you didn't say that. I said, real estate college. Here you lose money. In college, you had to pay the money.
Right.
Great point.
It's the same thing, all right? It's the same thing.
It costs money.
Cost 15 grand. Well,
Right.
last semester cost you 25 grand.
Right.
But just one word or one comment, or just the way you acted, then you shift, right? You shift your behavior.
But it has been a good ride, Rob. We've got to share
Yeah.
some great time together. And coming into this meeting or appointment or setting,
I'm looking forward to the next 10 years. I
Right.
mean, listen, if the people above me that are way smarter than me say, hey, the next 10 years could be the best 10 years ever,
I think we'll
you
be
know,
busy as long as we keep grinding as we are.
we keep working, a little belly to belly, a little technology, a little clearly.
Stuff like this will help us. Get the word out.
100%. You know, understanding the difference between somebody that just does this to do it,
Right.
and somebody that breathes
The business.
this stuff
What you
day
do.
in and day out. You know, being available. It's the good and the bad, right? We're a retail business.
We always gotta be available.
Yeah.
Well, speaking of being available, so phone number.
Yes, my cell
Yeah.
phone. I actually, I hate, like, I don't mind admitting it. I don't even have an office line.
Okay.
Right,
'cause you live
because
in this-
I need people to understand, like, well, if you call my office and then you don't get me, you may not call my cell. So I just threw the phone out of the office and said, no, just use my cell, 631-921-1217. Call me, text me 7 days a week. I do know a lot of what we do when we discuss on the weekends. So I'd
Yes.
make sure to tell every customer, no, I know it's the weekend. It's fine.
Right.
You know, we're like the mall. We're always open, ready.
We're
And
always open.
we have more staff on the weekends.
You're right.
So please understand that, you know, during the day we could be busy, but it slows, and then all of a sudden I get home, start making dinner for the kids, and we have a whole new range of 6 to 8 of people coming home from work, right? You know, this is
Yeah.
what we do for a living. We take phone calls.
Yes.
Other people have a
time on
boss
the
that say you can't go on the phone, and we can't conduct what we need to conduct during the day.
There's times you're on the
So,
phone 8, 9, 10 o'clock.
You need to be, you know, as for those sports enthusiasts, Stephen A. Smith, you have to be availability leads to reliability, reliability leads to availability, right? And it just kind of feeds itself, and it all comes to, you know, get out of your comfort zone as we started the meeting.
Yes.
And you know, like-minded people want to hang out and do business with like-minded people. It's not,
That's a great
not a
point.
difficult thing.
Yeah.
We'll get uncomfortable
fun.
together.
Good point.
Okay.
So with that being said, everybody out there, Robert Morandi, once again, we appreciate it.
Thank you, guys.
Yeah,
Thank you, Team Musso.
I hope everybody gets some good stuff and good data out of this. Have a great week, guys. We'll see you soon. Be safe.
Take care.